Hi, this is an example of positional biases and taking marginal trades from the ES starting on the 22nd of March 2012. Here's the chart of Thursday. This is the entire day on a 1-minute chart, and I've just marked in the high and the low at 82.5. And an important point that I was looking at personally on the open of Friday, as it tested a number of times and really failed to get through. We were opening up right around there, and I felt that it might retest and attempt lower. Now, what I want to do then is show you exactly what happened and try and paint the picture of what might have gone through your mind in real time had things not gone according to plan. So what we can see here is it did open and test that. Now, had I not been confident, had I not sold that 89, I'd be thinking, oh, I was right, that I should have sold that. And it did indeed continue. Yeah, see, we're just slowly moving down, although we do come back and test in a minute. And right now the first point of reference we're looking at is going to be this low from the day before. It happened, it was traded twice, touched twice, and probably will be a good target again. So we've got down to 84.75, and now all of a sudden it looks like we're moving back up. Now, if we're not short already, thinking, oh well, it's going down to test the 82.5, this would be the time. But hang on a sec, what happens? Okay, so we go all the way back up and test the opening price at 88. Actually 88.25. So right now that probably has you questioning whether you want to take the trade at all. However, now it starts to sell off again, and it's a little bit quicker this time. You can see this is quite a wide bar, candlestick, and you're thinking, oh, I really should have taken that trade. Where do I get in? Where do I get in? So maybe you think about getting in here around the 85s, and that might have worked a little bit, depending on what your targets are. And we come down, and we come down. And actually it was quite a good sell-off. This really was quite obvious in real time how strong it was, and actually broke that low from Thursday. And sold off a little more. You're thinking, oh, I really should have got short. Had you not got short the first time, or maybe when it shown that wide bar there at the 85 area, the first low, then you'd be thinking, oh, can I get short? Can I get short? Where can I get short? Hang on a second. Okay, so it's coming back now, so maybe I should get short. Where do I want to get short? Okay. And you'd probably be thinking, I don't know, maybe somewhere around 84, 85 if it shows you any sort of weakness on a retest. And you're thinking straight away already, oh, it's only got to 83.5 and then it's gone down again. But that's not what then happened. We carried on up a bit. And at this point, you're still wanting to get short, potentially, because you have this idea that you know, you've missed out on such a good move down, and you had it in your mind that you wanted to trade it, and you know you knew where you wanted to get short. You had good areas to trade, and really it's your emotional self just causing your problem and making you forget that actually what happened is we broke hard through there and it came back quite hard and then it failed to get back below Thursday's low. So all of a sudden you're looking at getting short, but really you're the wrong way round and your mind has tricked you into it. It's not the market, it's not anything else. Your mind has given you this emotional bias, and you've probably even got in at not a great price. Maybe you've taken those 84s, maybe you waited a little bit longer, I don't know, but whatever, you're positioned against a rejection against strong price action, and you know, if it's got to reject against a strong sell-off, it's got to be pretty strong buying to make that happen. And all the time, all the way up now on your short position, you're thinking, where do I get out? Where do I get out? And the problem is because there are others in the same sort of situation as you, in the same sort of position, it's never really coming back that much because there's always that demand. So you can see these pullbacks are only like 1.5 points-ish each time, and it's not really a lot. You think, oh, well, maybe it's stalling now, maybe it's going to turn around. And what happens is, until these guys who have got a poor position on get out, the market will just continue to squeeze and continue to squeeze. And I wonder if I can just speed this up because it's taking quite a while, but basically what happens is we just carry on up and up. And we break the high and we just keep going. And that's a really good example of how a positional bias based on historical trading activity can cause you to not see the things that are pertinent to market direction. I hope you enjoyed this. Thanks for watching.